And we're back with Lori, your favorite mortgage whisperer, because staying uninformed can be costly. Lori, thank you so much for joining us, and let's dive in on what's new on the lending and financial horizon.
Hi, thank you for having me back on again. Since our last podcast on February 16th, we've seen quite a substantial decline with fixed rate mortgages. So February 16th, they were about 4.55 for a 5-year fixed. And as of Friday, we're now down to 3.84.
So that's good
And
news.
we're still good news.
Yeah.
Each lender is offering a different rate, different terms and conditions apply to those rates, whether it's a quick close or a long close. So fixed rates are coming down, and we suspect they'll continue to come down. Well, I think until they called an election today, and that will be April 28th is when we'll have our federal elections. We could possibly see fixed rates come down again. And the next announcement for the Bank of Canada, which is for people that have a variable rate mortgage or a home equity line of credit, will be April 16th. And right now, the prime rate of Canada is 4.90%. They dropped it another quarter point. And there's talk right now that it could go either way or just stay. So again, I don't know what's going to happen. I think depending what happens with our election and what happens with the United States on where our rates will go. But what's great for the fixed rate is, of course, we have about 1.2 million Canadians' mortgages are coming up for renewal in 2025. Mm-hmm. And the majority of them were at 1.7, 1.8, 2%. So it's nice to see when their renewal comes up, they're not into the 5% or the 4.5%. So that's going to help them quite a bit with their monthly payments. So that's good for them.
Yeah.
And hopefully it comes down a bit more. We'll have to wait and see.
So with interest rates, I understand that if our inflation goes up, that means everything is getting more expensive. How does that work? How does that tie in?
Well, the fixed rate mortgages are linked to the bond rate. And so when we see inflation go up, that's typically when we'll see more fixed rates go down a little bit. Mm-hmm. So it's kind of the opposite. So and that's what's been happening. I mean, that's the $1 million question right now is with these tariffs, what is going to happen? I mean, the last I heard, I think on Friday, 9,000 people are losing their jobs because the Hudson Bay is closing. Whether that's accurate or not, I'm not sure. And then if we have the tariffs go with the steel and the dealerships back east, that's another how many thousands of jobs. So I'm really not sure what that's going to do to our economy.
A fair bit of uncertainty, that's for sure. And Lori, I've heard that there was some changes or something proposed by Mark Carney about GST. Can you dive into that?
Yes. So Mark Carney has proposed that he's going to increase the GST exemption from $350,000 up to $1 million. And this is for first-time home buyers with new construction. Okay. So it's not for a client that's just going to go out and buy a house or a condo. It has to be first-time home buyer and a brand new build.
So brand new build or substantially renovated. Is that correct? Because that's when GST would apply.
Right. From what I understand, yes.
Okay.
So I'm still waiting for clarity on that. He hasn't really said much more than that.
Well, with the election coming up, I don't know when that's going to take into effect either. Like there's again, more uncertainty on when that's going to happen, but that's a reasonable proposal for first-time home buyers that they would be exempt from paying GST up to $1 million on new build and potentially substantially updated properties.
So what the policy is now is it's exempt up to $350,000, and then there's a partial exemption from $350,000 to $450,000. Mm-hmm. So I don't know if it's going to be 100% exempt up to $1 million or if there will be a partial component in there. That hasn't been clarified.
That's a good point too. So we don't have all the information on that yet. Okay.
No.
And there was some changes in British Columbia on the secondary suite incentive program, which I was digging into. I wanted to learn more about. I wanted to see how that's going to be more financing. And thanks so much for coming back and letting us know about that, because you did promise you're going to keep us updated. So tell us a little bit more about what's happening in that sense.
Well, and it's funny because when we spoke last on February 16th, I was working with a client in Vancouver who was in the process of applying for this, and they actually backed off. And when I was shopping around to find the best lender, I found out a lot of lenders didn't participate in this program. So just because the government says they're offering this, it doesn't mean that every financial institution or credit union bank is going to support that program. What I heard EB say on TV about a week or two ago is that there was just too much unpredictability right now with the tariffs in regards to how much money can the provincial government release for this program. It's like they kind of need to have more funds on the back burner for a just in case.
Mm-hmm.
You know, so, and that's the same thing he had said about, I believe that the EB government was, people in BC were getting up to $1,000 rebate. And I know that stopped as well, just because of the uncertainty with the tariffs. So it was a very short-lived program. And whether we ever see that back again, I don't know. I'm not sure what's going to happen there.
Yeah, that definitely makes sense. And it seems like there are a lot of uncertainties. So what we're going to be doing, I hope to have you back on just for any updates that we do have for rates or anything that's happening in the financial sector or mortgages and so forth. I'd love to have you back because everything's up in the air right now. But if we find out anything more moving forward, I hope we can do another one of these and keep everybody updated.
Absolutely.
It's important to stay updated and know exactly what we're dealing with for sure.
Yeah. I would like to see personally is if the provincial government did a better exemption for property transfer tax.
Oh, yes.
That's the hard part because with GST, we can absorb some of those funds into the mortgage. We can't with property transfer tax. If a first-time home buyer purchases their home underneath the cap for first-time home buyers on property transfer exemption.
Where they're exempt, yeah.
Yeah, it would be nice to see that increased for people who aren't first-time home buyers. I believe it's BC and Ontario were the only provinces that have property transfer tax. I could be wrong, but I think we are the only two provinces.
I know BC, Alberta doesn't. There's other provinces that don't. I'm not exactly sure who does.
I know Ontario does.
Okay, so it might just be us too. Mm-hmm.
Yeah. So, and one thing that I want to say, because I'm getting a lot of clients' mortgages coming up for renewal, and when your current lender is offering a rate, it's very important about the rate, but please look at the terms and the conditions. I would really hope that people are not locking into long-term fixed rates right now and doing more of a short term. And so just be aware of that. And I've had clients reach out to me and I've encouraged them to stay with their financial institution, but just get the information, get the knowledge, and then make a decision from that.
Awesome, Lori. Thank you. And I'll make sure to have your contact information below and we'll have you on again for any updates. So really, really appreciate your time. Thank you.
You bet. Thank you so much.